Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market. That is the crypto market, the NFT market, and how to make some or a lot of money if we are lucky on the internet. Loaded up for discussion today. We've got market faltering, just a touch on Trump's commentary on further aggressive tariffs. Legendary will update us on that. We've got the SEC stating liquid staking activities are not securities. This is really, really big news. Even if the market is not responding to it immediately. And Hyperliquid earned 35% of all blockchain revenue in July, putting up crazy numbers. We'll dive into some of that data. We've got Bread to do that with us today a little bit later in the show. We've also got the latest on price action on crypto and NFTs as usual, plus a general discussion on where we think attention and capital is flowing. So stay tuned for that. I've got Bread and Legendary in the co-host seats with me today. We were ready to get into it, but just a reminder before we do, nothing we say here is financial advice. The market is very, very risky. We do not know anything for sure. Please proceed with caution and exercise your own judgment. With that out of the way, Bread. It's Wednesday. It's the 6th of August. Coming to you hot out of the gate. How are you doing, my man?
Yeah, usually do. And that's me. I'm here like Monday. I had to opt for stability for my boy Legendary because, we're both on I was on sketchy internet. It's only me and him. So I couldn't show my face. Like, it was just like, I had to hone in and help him out. Now that you're here, I can have my sketchy Italian internet and I can talk to people. They can see my face, do finger guns and shit. So we're back.
We're so back. Did you get into some of the Bread lore for why you're in Italy? Did we get any visuals up on the show last time?
There was nothing on the show, but I did tell people in the modern market chat, I did show some, or in TG, I did show some visuals of what I'm doing here in Italy. So I'm getting my new pants installed, another 3 sessions, 6 hours a piece. So it was at 18 hours on the tattoo table. They're coming in nicely, but now I'm in full on lizard mode. I'm peeling like a lizard, and it's very colorful in this apartment.
I see. Oxy telling a different story here. You're telling me it was all PG on the show when I wasn't here, but you're saying it was not PG. It's like I don't know if I approve of how it's going when I'm not on, but Bread with the visuals for the people who are just listening in. And if you're not, if you can't tune in on the video, the Modern Market Telegram chat does get a few sneak peeks every now and again as well, some added utility for you. Legendary, how's things going your side? What's going on? We were chatting a little bit about the Telegram community, how that kind of has been building up for us. How are you finding it so far?
GM, I'm finding it amazing. We have 90-ish people in. I'm still going through requests, and that's on the Modern Market account. I didn't know that there's 3 levels or 3 layers to that. So obviously you have the messages, you have the message requests, which are the ones that I've been working through. But if you scroll through the bottom of the message requests, which is something I've never did on my personal account, there's like another button in there for like hidden message requests, basically, which are even more people asking to get in. So some people who are basically the first who asked to get in are not in yet because they are in this 3rd layer of hidden requests, which I just discovered that it existed yesterday. So apologies for that, but we are still getting people in. I also got a ton of people in my DMs. So everyone will get onboarded, but it's amazing. And to me, one of the like success factors or like metrics of it was, is there an actual conversation happening if we are not talking in there, right? I mean, obviously I'm in there, I have Telegram open all day, like the good DJ and nerd that I am, but the community is only then organic if like people talk amongst themselves as well. And this is happening, and this makes me very happy.
Couldn't agree more. Got some good conversation going on yield, farming, Hyperliquid, different projects happening. So hopefully that's what we want it to be, right? I want it to be the place where offline, out of hours, just the continuous conversation about whatever is on your mind and the biggest things that are going on in the market. So we can't deal with everything on the show. We can't answer every comment, but hopefully that can be a place where people can find their most important answers to questions. Coming to Funky right away, who unsurprisingly is one of the first in the Telegram. Funky, how you doing, my man? Good to have you with us. How do you want to start the show today?
GM boys, I want to give you guys some props. I don't like Telegram, and that group is amazing. It's awesome. And we get into all sorts of great conversations in there, and it's always very lively. It's always popping. A lot of good things to be reading through. You're learning stuff. Just shout out to you guys. In terms of cultivating a very high signal group, it is awesome. And I'm glad that you put up with Meg and me putting up cat stickers all the time.
Stickers are part of the experience. That's a part of the game. So we appreciate you for the stickers. Right. So let's. That's obviously something we're working on. We'll keep working on it. If you, we're working through the rollout, as Legendary said, and more things to come on that front as we kind of get the time to digest it and see what people want and need and what we can offer. So, in the meantime, let's hit the show today, get people up to speed as usual with the various pieces of information you need to know, starting with the price action. We've got Bitcoin pretty much flat at 114K. We've got ETH down almost about 1.5% to 3.6K. XRP is down 4% to $2.90. BNB is flat at 760. Solana is down 4%, back all the way down to 163, down 8% on the week. We have Hyperliquid down 5% to 37. That's down 13% on the week. Sui is down around 4% as well, down 10% on the week to $3.40. So definite pullback here across the board.
When you look at Say, I saw someone tweet on Say earlier that it was like running. Like there's some crime stuff going on.
Let's see.
It's equally going down. Cool.
Okay. So most things across the board, selling off a little bit here. I do think that there's a little bit of leverage getting taken out of the system. People assuming that the pump from Bitcoin is going to go straight to 140, 150. And I think people got a little bit overexcited, especially with the ETH pushing towards 4K. Rahim was almost grave dancing on us for not predicting a higher price than 4K. Look, it's not 4K yet. It's not 4K yet. So getting too excited about it before it happened has sent the price lower. So
I don't know, man, dude. I've been listening to a lot of these conversations on the treasury stuff. Man, like it's the yield thesis that we were kind of predicting when the ETFs hit, but these treasury companies are being the vehicle for it, not the ETFs, right? Because like the ETFs are slower, they're more structured, they require a lot more regulation to get in a place to actually do the yield shit. And these treasury companies are now like, they're coming forward like, bro, we're going to fucking DeFi farm. We're going to do and just going down the risk curve. So like, it's the same thesis that we had, that ETH is a productive asset and therefore it will get this kind of bid. And like more so than Bitcoin, it is the better asset for that vehicle. And people are starting to do that shit now too. So like if they keep accumulating it in size, like the way that they are, it's pretty bullish. Now, like we're talking about revenue, we're talking about all this stuff. I think I still like agree or have the same thoughts on like the long-term value accrual of like a lot of these L1 assets. And I'll be a little bearish ETH. I'll say it like long-term. I'm still a little bearish ETH and like smart contract platforms broadly. If they don't have some kind of unique mechanism to drive revenue beyond just like transaction fees, but like there's time scale you have to like accept.
Exactly.
Bitcoin had its position, is strong right now. Ethereum is better positioned. It has more adoption, more acceptance, it's more Lindy than a lot of these other assets, whether it's Solana or Hyperliquid, whatever. So like I still think that the Solana model is the better model, but I do think Ethereum has the better timing position.
Yeah, and you mean better timing because of the number of entities that are
the man hours
bidding
the man hours that has been accumulated. Yes, the number of people that have had Ethereum bags that want that number to go up, the Joe Lubins of the world that are recruiting the literal digital asset creator of BlackRock to come on his team to pump ETH, right? Like that's all because he's just been doing it for so long and like he has connections. It's that.
Yeah, I thought that specific hire was very significant. Ledge.
That's such an important shift, right? Because I remember it was before your time on the show, Brad, that B and I were talking about man hours in terms of developers working on ETH, working on Solana, working on other blockchains, and being like, the city of Ethereum has like such a massive advantage, which is impossible to catch up to. But obviously now with how AI has been progressing, my thinking was, this is not an argument anymore. Like AI can outwork obviously everyone and anyone, but now the man hours that you're referring, the basically skin in the game for years and years and years, and significant net worth tied to that, and actual relationships with other human beings in powerful positions, and wanting to use all of that leverage to ultimately make your backs go up. That is something that AI can't replace, and that is extremely difficult to catch up to.
Yeah, interesting stuff. Okay. We're going to circle back to maybe more broader market conversation when we talk about Trump's latest comments on tariffs and a bit more of a market analysis in a moment. But let's just get you up to speed with the rest of the news as well. Just on the meme coin side of things, again, red day across the board. Doge is down 3, Pengu's down 7, Pepe's down 3, Bonk is down 7. Fartcoin's down 7 as well, still beneath $1. Rect is down 3, Mog is down 1% or so. And Useless is down. Wow, Useless is down 20%. I didn't notice that before. Useless, obviously, the coin that is very much Bonk Guy's coin, being pushed as part of the Bonk ecosystem. One of those. 35% on the week, 20% on the day. That is pretty significant. Didn't notice that before. Just seeing that now.
Troll still continues the run up.
And yes,
another 68% on the day, now to 190 mil market cap.
What the hell is this? Is this a bonk token?
No. So this is a token that I was telling the guys on the show yesterday. I think I mentioned it last week as well. I was in this token at 20 mil. I like the meme. Troll is an OG meme. If you look at the accounts that are pushing the troll meme, it's like an OG meme, like OG internet meme. And I mean, there's not much of a more sophisticated analysis you need to make about the meme, right?
Is that the thesis?
Well, people like the meme. It's an OG meme, and it's been around for a while. I think there are some quite prominent meme traders, holders who are like in the token and have been religiously like pushing it all of that time. Like it's been out for a while, constantly like faithful to it in that sense, like really, really believing in it. And it looks like now it is kind of hitting escape velocity. A lot of the charts, and but I have no position in this. I'm kind of tempted though when you see the charts, they're like tracking the Pepe chart. They're like laying the troll chart over the Pepe chart. It's obviously gone to 190 now, and Pepe went to like 12 bill or something. So people are getting like quite excited about it. I don't know. I tend not to give any more sophisticated take on a meme coin, because in the end, like what makes it go from 190 to 1 bill? People like it. It gathers some momentum. Could it do that? Of course it could. Seems to be completely outperforming the rest of the market. So there's something to say for it there. But that's probably the maximum I'm able to say for it. Ledge, do you know any more on it?
No, other than the fact that you had mentioned it on the show yesterday with an all-time high, and mentioned it when you had it around 20M. I have no idea about troll. I mean, I know the meme, but nothing to add to the lore to that and satisfy notorious big bull's curiosity to have a deeper analysis on troll. I
mean, just search if you're more interested. Search for troll on the timeline, and I think there's an account called Free. It's like, is it Free? For Free Electron or something like that, and they're just tracking the Pepe candles. So if you want to get excited about something, have a look at that for your deeper chart analysis.
And people posted it. That I didn't know.
People posted it as well. Okay. Oh yeah, there you go. So maybe that's part of the pump as well. So some fun stuff going on the meme coin side, but as I said, red across the board mostly. Getting into the main headlines that we'll be discussing in more detail in a moment. Market faltering on Trump's commentary on further aggressive tariffs. I read the whole transcript of the CNBC interview earlier this morning, and it was making me laugh quite a bunch. Like, it's just funny. Like, there are just funny moments in it. SEC states that liquid staking activities are not securities. We'll talk about that. That's really, really big news. That a few years ago would have been like earth-shattering, but in this market, just it's kind of expected now. And finally, Hyperliquid earns 35% of all blockchain revenue in July. Pretty impressive numbers. So we want to touch on that in a moment too. Ledge, is there anything going on the NFT side that we need to know about?
Yeah, we had a beautiful Ape CryptoPunk selling, which was all over the timeline yesterday. So probably everyone listening to the show knows that this Ape, which we have up on screen, CryptoPunk Ape to be specific, sold for 720 ETH. In terms of the other majors, there's nothing too exciting to report about for the big collections. The one thing that is standing out, if we're talking about NFT archaeology, is that it is this time in the cycle where mooncats are moving again. They are up 22% over the last 24 hours. They are up 40% over the last 7 days. I still have some of them. Do you know my mooncat story on that?
No.
Okay, so quick side note. Basically, Mooncats is a historical collection, and it was this time when the whole timeline was obsessed with finding collections which predate CryptoPunks, so pump archaeological bags. And the Mooncats were never fully claimed, and someone discovered the contract again. It trended on the timeline, and you could like basically still claim Mooncats. And I was actually meeting a friend of mine for dinner in the city, and I was saying this thing is going on. So I was like, sorry, I have to bounce. And I couldn't even explain what's going on. I need to take an Uber home to claim some mooncats from the blockchain, which are a historical collection. I didn't try to explain myself. I just, got that Uber, got home, claimed a good amount of mooncats, bought some more. And I think the aim back then was to not get any of the colorful ones, but get some of the black and white ones, which were like extremely expensive. Like this one on screen, last time it sold, it was for 12 ETH, currently listed for 20 ETH. And that was the game you were playing back then. But also certain mooncats did sell for a couple of ETH each. So it was a lucrative endeavor to go on a cat rescue mission 4 years ago or so.
That's what it was. That's what we were doing on the blockchain. Pretty entertaining. One point coming in from English in the Telegram, just on Troll. Apparently, this is pure conjecture. Troll is speculated to be supported by Pump. So it's the competitor to Useless in a way. That's probably why you see the two equalizing in price. Useless holders rotating to capture the upside. Maybe it makes sense. One being so down aggressively, whereas one pumping so aggressively. I don't know 100%, but shout out to English for coming in with some insight there. Don't know the veracity, but
did you see the pump buyback dashboard that they released?
We mentioned it yesterday, and we saw that they were buying back 102% of all of their revenue was used in the last 6 days to buy back their token. What did you make of it, Brad?
No, I just think it's good. And like, yeah, thinking of the dynamic between the two, right? The counter to bonk is reached dominance was that like, well, Pump's got a shit ton of ammo, right? They have an established brand, established position, $1 billion to like do whatever they want. And like with that $1 billion, can they engineer enough to like gain traction again? I think one is, buybacks like is a very direct way to like get people excited about Pump the token and then Pump the platform. The other is like you talking about this troll coin, like, they could obviously like engineer a token to run back on Pump. But the other thing is like, why not just commoditize the token launchers, right? Like Pump has the reason Bonk is running is like, oh, there's so many people that are creating these tokens on Bonk and they've migrated, but Pump has the money to automate that entire thing. Like, why not just fund like either mirroring the tokens that are created on Bonk or just like literally having an AI scraper that says like whenever something even semi-relevant is posted on a news site or on Twitter or on whatever, and just like insta launch a token on their own platform, just subsidize the entire thing. Right. And then now you have equivalent tokens going on both. And like, if you continue to get like runners, like they gain market attention again and like the flywheel is back on. So it's interesting development. I'm continuing to watch it.
Yeah. And just a point on that for people to know the market movements. Pump is actually up 7% today, whilst the rest of the market is red, up almost 40% on the week, back to 3.4 bill after being as low as like 2.2, I think, last week. So real recovery for Pump. I feel like those two are going to be trading blows, and it could be quite a volatile token, probably quite a good one to trade in and out of if you were interested in kind of tracking that specific launchpad war. Getting into the rest of the market to get you up to speed on some other bits of news. There are all kinds of interesting things. Again, a lot on the treasury asset side. You got China's Ministry of State Security appearing to criticize WorldCoin, warning that foreign companies collecting iris data in exchange for crypto presents a national security threat. NASDAQ listed CEA Industries, a nicotine vape products company, raised $500 million private placement to buy BNB as its treasury asset. MEI Pharma purchased $100 million of Litecoin. as a treasury asset. Guys, Brett's shaking his head, said it
Too
before.
much.
This is bad. This is bad. We've said it before. This is not good. So we're just saying
Long term.
like,
It's good short term. Like this is great short term, but it's just like know that it's a short term thing.
we are getting later and later in the cycle. For like maybe the best assets, the volatility may never be as extreme as it used to be, but this is very extreme behavior that we are witnessing now. Even actually just some of the NFT activity is making me think, okay, some of this stuff makes no sense. And it's only in certain scenarios where stuff, it only lasts for so long that people can make such terrible decisions. So I think, you just got to be cautious here. Still generally bullish, but, just be aware. Leading Ethereum L2 base experienced 33 minutes outage. That was a couple of days ago. CZ, former Binance CEO, seeks to dismiss the FTX clawback claim of 1.76 billion allegedly exchanged between the two entities. Coinbase plans to raise $2 billion via private offering of convertible notes. As mentioned, Pump Fund reclaims top spot from Bonk in 24-hour volume for Solana meme coin launchpads. Succinct Labs launches the Prove token yesterday, opened at 1.2 bill. Not a bad launch for any new protocol, although obviously loads of people were unhappy because that's what happens when you give people free money. Solana Mobile begins shipping the second generation of Seeker smartphones. That's kind of interesting. I did not order this second one. Ledge, have you got your second one? Did you order a second one? The first one was very profitable to buy. We ordered that, and I think we probably made 4 to 5 figures off it from various trading on it. But and all the airdrops associated. Did you get this one?
That's Gen 1. Still have it here. Haven't turned it on for a couple months or so. But I should see if I have any new tokens on this thing. This was fun to do for a while. I ordered Gen 2. I ordered a couple of them. And I also ordered the base thingy. Or is it a phone? I think it's
base
a phone.
One? The ETH phone. There's a ETH one, but I don't think it's from base.
Yeah,
but it's on base.
Oh, it's on base.
What happened to that one? I have 15 of those or so, or 17.
Like, why did you buy 15 ETH phones?
Because I lost it. I don't know. I had it back then, but I don't remember it.
So there was a thesis at some point. Yeah. I do actually think crypto phones have a very good opportunity to disrupt mobile in general, because crypto is the future rails for commerce and whatever. And I genuinely think, I know, Led, we spoke about this privately the other day, like you're still like bullish Apple. I'm bearish Apple. I know they've got us all locked in, but I think they're incredibly bad at like adopting the new stuff. I don't think the new stuff is hitting as well. I'm not sure, we're locked in at the moment, but I feel like the next
new stuff being AI now and then crypto beyond that. Is that what you're thinking?
Yeah. I mean, Siri was appalling. Their attempt at visual stuff, it has not taken off at all. Maybe they're too far like looking forward, but I don't think there's been a significant improvement in their core products. And I don't think they're fast to the next things. That all the innovation has gone elsewhere. They're playing it very safe, just keeps like slowly updating the iPhone all the time. But yeah, I'm kind of bearish Apple, and I think that something crypto related could disrupt mobile, because I can't see any of the other. The thing is, Apple's better than all the other mobile stuff out there now, so it's going to take something else.
What are your thoughts that AI is what disrupts mobile? Right, like Sam Altman's talking about creating a device, and like it was hinted that it was actually going to be a mobile device, and it's going to change the entire interface from the phones that we have today to something that is catered purely to having an AI counterpart, LLM, whatever.
I like that idea. I like the idea. I think it'll, like with World or whatever ecosystem that's going to build. So that's like crypto rails with AI as well. I like the idea of the glasses. We've all got the Ray-Ban Meta glasses now, and I think that could be part of it. Yeah, I do think that just that device is ready for disruption now that it's been out there so long. And they keep getting bigger. They're too big. They're kind of annoying. It needs to be disrupted. That's my bet. So intrigued how the second Solana phone does. And that's it. That's the roundup to get you up to speed with everything going on there. Before we get into the main stuff, Brett, did you want to have a further take on that kind of disruption in the tech? Anything else catching your attention before we get to the main headlines?
Go to Legendary. He's got something.
Okay.
I wanted to comment on Vape because I don't know if you remember, but we mentioned it a week ago when we did talk once more about treasury companies, and I said back then they planned to raise 500 M's. Now they closed the raise, and they had an additional target of going for a total of $1.2 billion worth of BNB over time. And just from a trading standpoint, it's very interesting to observe the fact that it trades exactly like a meme coin. This was when the announcement happened. The stock did a 6x. I'm sharing this on screen. It did go essentially from $9 to almost $60. This was when they announced they were going to do the raise. And now they did the raise. They collected 500 M. And the stock is down 56% over the week. And it's basically down to only a double up from where it was before they announced it. So it is... Why is this not loading? So it's literally just a speculation on the announcement, and nobody cares about the execution again.
I'm getting absolutely fucking murdered on the hype D buy. Exact
Really?
same chart as this.
Really?
Yeah, I think I bought it like 12. It sounded like it just went down like 5, 7 or something. It's like murdered, right? So as I've been listening to a lot of podcasts, because a lot like these stats are the conversation of topic of conversation. We're starting to get dashboards on Masari and on Delphi Digital, like all these things that you can actually start tracking them. And I'm learning some of the underlying mechanics of them a little more, just because people, oh Jesus, it's on under 5. Great,
sorry,
great. Now, like this doesn't mean that it's ultimately not going to recover. So like I'm just along for the ride at this point. That this is an educational cost that I'm paying, just watching this stuff and an incentive to continue watching it. Why these things tend to do this, right? Like, so the underlying cost or the underlying asset is the thing that you have. You have then the entity itself and the price of the stock. That is, and MNAV is the gap between the two, right? If you're trading at a premium over, the MNAV is saying what the premium is. $2 for every dollar worth of the underlying asset that you have, right? MNAV is the gap. So the thing to monitor with these things, which is very, very hard because all of it is hidden away in quarterly filings and like paperwork that no one understands, reads, or gives a shit about, is that like what that MNAV actually is. And then trying to understand how the operating team is actually going to acquire funds in order to continue to do the treasury play, right? Most of these treasuries are the treasury companies, because they're not large enough and they're not established enough, and because they're not sophisticated enough, are having to dilute shareholders in order to actually acquire more of the underlying thing that they want to do. So like they're very explicitly saying like, buy this thing, we're going to dilute the fuck out of you, and then we're going to use the dilution event as a way to buy more of the thing. So me not knowing that, whenever I bought, just thinking it was like, oh, it's just a 1-to-1, kind of like an ETF. It's not that. It's definitely not that. It is a leverage play. I understood that. I didn't understand the mechanisms of how they achieve that leverage. And it's different for people like Saylor, because Saylor has access to different capital markets where he is getting loans from not diluting from the bond market or the debt market at basically a zero interest rate, and then using that to buy more Bitcoin, which causes his thing to go up because he's not diluting himself and or his shareholders. Most of these people, and this includes something like basically all of the Ethereum treasury companies, do not have that vehicle yet. Some of them are likely to achieve it, right? Like you're talking about Tom Lee, you're talking about Sharpink, they're likely to achieve that. But that is why we see this for basically every other one of these treasury companies, because these are the people that have the pipes. They say it, they announce it, everyone runs up on the speculation, not knowing the underlying MNAV. They then dilute the fuck out of everyone. And then with that, they go and buy more stuff. So like they're accumulating more of the thing, they're doing their mandate, but if they don't actually have a lot of their own stock, so they don't care if they're diluting themselves, you want to make sure that they are diluting themselves so that their incentives are not to continue to fuck over everyone and to acquire the thing. And then ultimately to have a strategy to generate more value, whether it's like with DeFi strategies or yield farming or whatever, to kind of close that gap or allow for that premium to exist in a higher capacity so the stock goes up. It's not great, but that is currently where we're at. And there's only 1 or 2 vehicles that are like likely to achieve the same thing that Saylor has been able to achieve with access to the debt market.
And if you missed our show on Friday, I strongly suggest everyone who's interested in this topic to go to our YouTube channel, go to the video section and watch the latest video where Funky did a 6-7 minute long explainer after the earnings call of a strategy of how their strategy actually shapes out, how they have all these different offerings in place. And also Michael Saylor was speaking about trying to strike this balance between getting more Bitcoin ultimately, but also not diluting the fuck out of the shareholders, how you worded it, but being respectful of the share price as well. So very, very insightful. I learned a lot from that segment, and we have it in full length on YouTube.
Let's put the video in the comments, Ledge, on Twitter, and let's stick it in the Market Insights channel in the Telegram, because I think that's super, super helpful. That's exactly what the kind of follow-up we want to be able to revisit, because I think that would be helpful. Final point for me on that treasury stuff before we get into the main headlines is also you want to see, like, look at the names that are getting into these rounds of buying in and like getting some of this equity, and just think when are they exiting? They're going to get these shares that represent whatever share in the company. They don't get their shares straight away. At what price are they? But it's the same VC model. It's the same VC names that have done the game in crypto with infra for the last 2 years. And now they're not allowed to make any money in infra anymore because the market won't give them the value that they want on some of these tokens. And so they can't just wait 6 to 12 months and sell all of their bags because the valuations are not getting to the numbers that they would have wanted them to get to. It's the same game. Buy early, wait a little while, hopefully unlock when the price is higher than the price that you bought at. And so for them, my guess is that it's not about, to them, they don't care whether ETH goes up or not. They just need the price of that share to be higher in future. And, related to that, I guess they're thinking it's helpful at the specific point in the market that if we buy here, ETH is bullish at the moment, and therefore later on the price of the share should be higher. But it's kind of like an OTC deal, as far as is my instinct on it. It's kind of like an OTC. We'll buy at this price in X number of months, and I guess that will depend on each company's arrangement. We get to unlock either some or all of our shares, and you're betting that the price will be higher then, at which point you can unload either a proportion or all of your shares for a tasty profit. So just be aware. I think that is likely how some of these things are operating. It will operate in different ways for different companies, but just keep an eye for that as well. Any final takes there before we get into the main headlines? Let's do it. Pledge, market faltering, Trump being on the news, general market thoughts at the moment, a little bit of red, a little bit of fear in the market. What do we need to know?
Absolutely. Let's take a look at what is going on with the USA and with President Donald Trump. So there was this interview on CNBC, which had a ton of viral clips from that because, as you said, it has some very entertaining parts in it where Donald Trump was talking about many things, including tariffs, including the Federal Reserve. And there's a couple of things to take away from that. I'm not going to read from the transcript. I'm just going to summarize the key pieces. There's going to be country-specific new tariffs starting tomorrow, including India. There's also going to be an additional, quote-unquote, small tariff on pharmaceutical imports that will increase over time to up to 250% within a year and a half. There's also been more talk about Jay Powell as the Fed chair, and Donald Trump was saying both, I'm quoting here, both Kevins are very good, referencing the former governor Kevin Warsh and Kevin Hassett, the National Economic Council director, and he has a strong preference for seeing this change happening. In terms of some more news from around the tariff section, we have more semiconductor tariffs in the works as well. We have AMD's earnings also falling short of expectations, and the stock reacting to that. And generally, we've seen a bit of a pullback. Let's bring up that chart. It's not massive though. In the S&P 500, it's down over the last 5 days, 1.1%. It's down just a touch yesterday, 0.5%. However, looking at the pre-market is in the green again, where the S&P is up 0.2%. So it's not too strong of a reaction on the index side of things. If we take a look at Finvis to just get a broad look at some segments and sectors, we can see a bit of a stronger pullback in some of the tech stocks. Nvidia down 1%, Microsoft down 1.5%. However, that's also not such a wide trend because on the other hand, you have Amazon being up 1%. So if anything, I would argue that there's like no strong negative or positive reaction from the market at the moment. We have both things going up, things going down. We have a slight pullback in crypto, but I feel like the market still doesn't like the uncertainty around tariffs. And yes, tariff news and tariff related news don't have the same effect which they used to have back a couple of months ago when the tariff war was still a new thing. We got used to it, but of course there will still be reactions in the markets as we learn more things, whereas President Donald Trump is making strong statements when it comes to imposing new tariffs.
Yeah, good stuff. Thanks for the summary there. I think you're right. Like the market may have faltered a touch. I don't know so much. S&P seems fine. Crypto, I think, maybe just got a little bit ahead of itself and needed to just chill out a little bit here. And so, yeah, I think there was a lot of leverage coming in a little bit later, or as things kind of got towards all-time highs, people getting supremely confident that that we were going to move higher. I also think the fact that, we're going to talk about Hyperliquid's data points a little bit later, but like so much capital's on Hyperliquid now, and therefore, like, we know it from our own personal perspective, and our personal perspective is something I increasingly trust. Like, there are people using leverage who just didn't use leverage before. Like, we are using leverage, and we might not have used leverage before, which means if we're using it, other people are. And so there's more leverage in the system because more people are getting excited and using it. So I do think there's been an uptick in it. Hyperliquid's open interest numbers have been up only the last couple of months. So no, I think we need to wipe some out, and then we can reassess. I'm still generally bullish for the next few months, keeping a very, very close eye on these treasury companies and some of the increasingly silly ones. But yeah, that's my view. Brad, curious for your general thoughts here on the general market, or any other direction you'd like to take that.
Yeah, I mean, the general market stuff hasn't changed. Like like until there's a regime change, like this stuff is just going to continue to trend up. We're going to have blips like this. We do volatility is a feature, not a bug, for the Trump presidency. So like this is going to happen. Like every 2 or 3 months, we'll remind ourselves that this happens, and it's going to happen. As for the Hyperliquid thing, like, yeah, they're generating a lot of fees, but like they're still like 8% of what sexes do when it comes to perps and liquidations, leverage, all this shit. So it's like they're sizable on chain, but I don't think they're large enough to have like any kind of impact on the scale at which things are pulling back now. I think this is just like normal market, like you said, liquidations, like the reset. Everyone's out over their skis, so it's just par for the course. It continues to happen.
Fair enough. I think that's a very fair pushback / additional point. And yeah, as you said, we'll talk more hype data in a moment. Getting into the second headline then, which I think is very meaningful. We had the news that the SEC declared crypto liquid staking activities are not securities. This tweet from very prominent trader, investor, moon overlord in crypto said, every single day a piece of bullish news drops that if it happened 5 years ago, it would have been the single biggest news story of the year in crypto. Now we don't even talk about it. Adoption, and yes, we won forever. Maybe something slightly more detailed from DC Investor said Gary's SEC would have danced around this issue for 3 years, not saying anything concrete, leaving it ambiguous, keeping you guessing to chill any adoption, then let a few things blow up, then sue a couple of good faith actors trying to do things the right way. This SEC led by Atkins has obviously said, right, let's do this. It's all on chain, it's transparent, it's legal. Now everyone can be content that these liquid staking activities are not securities. So I think this is a super big deal. Although the market might not want to or believe that to be the case, maybe it's sort of already expected that this is the general direction that we're trending in now once the administration changed. And so it's kind of priced in that once Trump was in and they're so pro crypto that this was always going to happen anyway. But I still think nevertheless, that's giving people a really great green light to just like keep going down the path that they're going on, keep going for it. And so I think that's pretty good news. Brad, coming to you on maybe the the staking side of things. It's maybe slightly more technical. What would you have to say on this news? Any major thoughts?
Yeah, nothing on the technical side, and just kind of a reiteration of what they're talking about, where, man, like, it's so refreshing to just like, to not even that they're actively advocating for it, just that they're not getting in the way, right? Like, just let people build and experiment and do shit, and don't do enforcement like retroactively after you do stuff by sending out, letters that you're going to be found in court of whatever I forget what the letters they were sending to like Uniswap and everyone. But that same shit after the fact. So I'm just thankful as like a builder and a resident of America that it's like we finally have like this weight off us that has been there forever, and especially so with the Gary Gensler regime. So yeah, just super happy.
Pretty good stuff. Ledge, do you want to come in here before? I know Funky's got something to say on this. Do you want to come in first?
Yeah, I was thinking about, because we talked about treasury companies, so that has to be good news for Sharplinks and for Bitmain as well. At least Sharplink specifically said they want to stake, they want to have restaked ETH, want to farm yield with ETH. Sharplink is up 5.7% yesterday. Bitmain's up 6% as well. So at least someone cared about that and reacted in the market.
Good point. That's a good point. I think maybe those treasury companies have lagged a little bit, or maybe they just had a bit of an explosion, then retraced a lot, and now maybe they can build up from there. And yeah, as you say, for Ethereum treasury companies more than any other, I think that is excellent news. So good to see some response from the treasury company stocks there. Funky, what's your take here on the staking news? Why do you think it's significant, if you do?
Before the staking thing, I just want to say real quick about the general market sentiment. I fully apologize publicly to everybody for releasing the hot tub video, thinking that we were going to bust through and get a new all-time high. So that kind of jinxed it. More importantly, about the staking stuff, there was an interesting conversation last night in the Blockchain Association group chat, because former SEC folks are already raising the red flag about this. And it kind of gets back to, if you remember, probably a year and a half ago, Bread was the first one raising the alarm about, hey, restaking is this may be the thing that takes down the market, in a couple years or whatever. And I'll post the thread below, but she was saying like all of what they're allowing is the same sort of rehypothecation scheme that what we saw with the credit default swaps and the mortgages and everything else that created the Great Recession. So she has some very legitimate concerns. However, basically the Blockchain Association was like, we're looking for counterpoints against some of these things that she's broaching. So there are concerns out there. I think maybe sometimes they're a bit misinformed because they don't understand the technology. Like she was saying, a centralized provider issues these things, but underneath the hood, you have, let's say Lido, for example, which is the biggest one with Steth. They have, hundreds of operators running these nodes. So it is decentralized under the hood, but I think they just see one name and they realize, oh, this one entity is issuing these liquid staking tokens. And it's not necessarily the case when you look at the architecture and the infrastructure beneath it.
Awesome. Thanks for the additional contribution, Funky. Always helpful to get that kind of behind the scenes insight. Let's hit the final headline then.
One thing before we do that, we had Signal joining us on stage with her hand up. So very curious to hear from you on our discussion so far.
Hey, legendary B-Check. Yeah, good to see you guys. So one thing that I think is quite interesting at this time of year is that normally August is like a really, really quiet season. Like I normally call it eggplant season because the only interesting headlines you get in the news is like, what are the largest vegetables that have been grown in your region? And I think this August has been completely different to that. We've just had a wave of incredibly bullish crypto news. And essentially last week, can't remember which days it was, but we had the head of the SEC, Atkins, come out with his statement on digital assets. Then you had the digital assets report. Those two pieces of news should have sent us higher. And it was only because of the back of the tariff news that we actually went down. And I think August right now, how I'm thinking about it is like, how do I kind of want to position myself for this last Q4? I'm really appreciating this chop we're having right now. And I kind of disagree with what you were saying, B-Check, that we are priced in. I don't think we're priced in at all. One of the most interesting statements yesterday that came out of that CNBC interview with Trump was that he said that when he stopped being president after the first term, JP Morgan essentially told him that he needs to leave his bank, and he had to take out $10 million. If you're trying to move a large amounts of money, it's not just like, oh, hey, I go on my Revolut app and transfer $10 million. He had to break it up across many, many small banks, and essentially all the large banks rejected him. Now, fast forward 4 years later, he'd be able to essentially take that off rails into stable coins, stake it, like do whatever he wants. But all I'm trying to point out is that the environment this month compared to last year August is so much more bullish, and I think Q4 is when you're going to get this leg up that you see, only 3-4 times a year where Bitcoin essentially sends. I think we're going to get that in this last Q4, and essentially I think a lot of people are still underestimating that.
I like it. I like that thesis. Thanks, Signal. Yeah, I definitely think that we have a lot of scope for Bitcoin, especially because Bitcoin's kind of chopped. Bitcoin's been a bit stationary here, whilst ETH has been the catch-up play, and whilst the kind of memes have kind of moved along with it. So yeah, I'm definitely open to that idea. So Signal, just one follow-up question, or maybe two. How are you positioning yourself? Like when you're thinking about the Bitcoin dominance, obviously took a hit this summer, as finally ETH did a little bit of a catch up and alts had a chance to kind of move. Are you concerned about the treasury companies that we've been speaking about a lot? And how do you square that with this idea that, okay, the you're expecting Bitcoin to really move. Can everything else move when like stuff has started to get a little bit silly? Are you appreciative of that, or is that not concerning you at the moment?
So to answer the first part of the question about the treasury companies, what's interesting is when I was listening to the Michael Saylor earnings call off the back of Funky's breakdown last week, he made me go and listen to it. Essentially, analysts are not pricing treasury companies correctly because they don't know how to. So even though some of them are profiting off the new accounting standards that we have, I do see diminishing returns there, where essentially as analysts start to learn how to price companies with treasuries accordingly, they're essentially going to look under the skirt and be like, okay, great, they've got crypto, but what else do they have? It will just become over time another factor as coffee shops to conglomerates have crypto as an asset on their treasury. So I actually see diminishing returns there, but I'm not concerned about it. To your other point about how to sort of navigate the portfolio, what I'm thinking about now is like, which alts do I really want to position myself in? I know we're going to have a conversation about Hyperliquid, but which have been the most resilient, which have been the strongest? I'm personally staying away from meme coins. I just like going into Q4, I just don't feel like wanting to stand on vapor. I really want to have some like coins in my portfolio which have strong fundamentals. I think they're going to lead the pack. And then from there, I'm also thinking, like, can I still just how much more Bitcoin can I accumulate before we have to step up? That is another thing that's at the back of my head. But standing on vaporware for me, this like going into Q4 is just not a strategy that I want to take this time around.
I like it. Always appreciate your thoughts, Signal. I'm sure that was helpful for everyone. Always welcome to share when you're available. Final follow-up question. What is the most exciting vegetable that's growing in your region this August?
They're not covering it because everyone's talking about crypto. So, I'm not even seeing that the eggplant season happening right. It's just season.
Got it. Okay, so no, the vegetables are not even getting grown because crypto's been too exciting. What a shame. Anyway, as you said, we want to touch on Hyperliquid before we close out. Brad, I'm sure you've had a chance to digest some of these numbers. How meaningful are they? What's the importance being attached to the fact that Hyperliquid is getting so much of the on-chain revenue? What do we need to know?
Yeah, the first thing I want to say is the thing you'll learn in this industry is that a lot of these terms are interpretive and there are no real standards. So whenever I first saw this, I said, okay, 35% of all blockchain revenue in July 2025. How the hell do they define revenue? Because not all
Good
data
question.
platforms even define revenue as the same thing. So I did that. In the bottom, it says they actually get their data from Artemis. I went to Artemis, and you can look at the methodology. Most of Artemis's methodology is just around burns and buybacks. So that makes sense for Hyperliquid because Hyperliquid is hyper optimized to use buybacks based on the volume. So like it does make sense that it outpaces a lot of other ecosystems. The thing that you're going to get pushback on from these other ecosystems is that they don't think revenue or fees burned is a holistic picture of the value that a token or a blockchain represents. And that's where you get into the rev discussion. And the rev discussion expands the buybacks and the burns of a token, which is fairly minimal on most of these networks, which like if you look at Ethereum, if you look at Solana, and it expands it into including like MEV, priority fees, like all of these ancillary things that measure demand for block space better than just like straight up fees and revenue. Now, this is a little bit of a separate conversation just because it's like this thing is specifically just like what impacts the token the best. And again, it gets nuanced into like whether those other things impact it, how directly, how do you measure it, and is it valuable, whatever. So it is good. Hyperliquid continues to dominate. You can see on the chart clearly it's continuing to grow. I would say that the market doesn't necessarily care as much right now, but I think it will be more and more important as time goes on. So I think for that reason, it is good to continue to pay attention to it. It is something that gives me confidence to stick to the token because it is continuing to assert dominance inside the industry with its new model, and other blockchains are struggling to keep up, and they're doing things specifically to mirror what Hyperliquid has done with stuff like ordering cancels in front of like priority canceling or prioritizing cancels in front of orders on their order book to protect market makers from other market makers. Just like you don't want toxic flow, right? That's the entire point of that. Is just so like people don't get picked off with stale bids, stale quotes. Now, tying this a little bit to like forward guidance and what Signal was getting at, we try to think like the secondary effects of like one. I think hype's good. It's clearly a great position. What else is good? And try to think of the second order effects of a lot of these treasury companies. And yes, I too am not a meme coiner, and I too would like productive assets. And the clear thing that is coming that we led this show with, at least for a portion, is that like there's a shit ton of people that are just pumping a bunch of money into these treasury companies, and that treasury company is searching for yield, right? They're going to be searching for yield because that competition is going to heat up. So where are they going to go? Like they're probably going to go to like the next thing that is riskier, but not as risky as like the risk-free return of just like staking, right? Like, okay, do you restake? Do you put it in Aave? Do you put it in Pendle? Do you like, what do you do with it? Right. So I think the onus on us is to look into like where we think these people will deposit their funds. And if doing that has any kind of structural application to the underlying token of the protocol, if it's fluid as the DEX, if it's again Aave, if it's Maker, if it's whatever, and if we start seeing that stuff, that increases the lower bound of where that token could potentially go. And right, maybe they start learning about that thing, and then they start getting pulled up on that thing, and like they start bidding it in some ways, like either people on chain or maybe a treasury company gets spun up on the underlying asset of the thing that everyone's using to farm the thing. Revenue good, Hyperliquid good. Revenue will continue to be a thing for the next infinity years. It's not a meta. Pay attention to it. The way that this revenue is calculated is good, not amazing, but it is notable. And we should see where the DeFi is going for the productive seeking assets in these treasury companies.
I like that thinking a lot because it ties into what you were talking about earlier. And there was it wasn't an internal doc, it was a public statement made by one of the hype companies saying that like, yeah, we're going to participate in this stuff. And so thinking one step beyond is thinking about the protocols which all of these companies are going to be depositing all that capital into, in the same way that once upon a time, maybe, you know, the bank share price goes up, the more that the more assets under management the thinking would be, yes, Aave becomes more valuable as more people seek yield in Aave. And as you said, there's a variety of locations that, or a variety of protocols that'll be vying for all of this new on-chain capital. So I like that thinking a lot, to start to think in those terms. I like it. Okay, good.
One thing, Oxy just did a comment in the YouTube thing, and the YouTube comments. I think it's a good thing to speak on. So he said, Brad, why does Kinetic only estimate 2% APY on staking Hype through them if they're dominating so hard on fees? Is it because of how low their fees are for transacting? No, it's actually because that's like totally divorced from like why, like, remember, you have to remember the construction of Hyperliquid, right? Hyperliquid is 12 validators that if they stake it, they can sit there and they can basically just like capture the transaction fees. And because everything is basically private and it's all pipeline, there's no like splash effects of an open permissionless validator and block builder set where like there's MEV and there's priority fees and things are crazy, right? It's basically just like liquidations and transaction fees. And the transaction fees are actually pretty small, right? Because like most of the value that happens on blockchains is basically all MEV. It's all priority fees. It's all this other shit. And you don't have that on Hyperliquid, right? You're never setting like, oh, I want my thing to go in faster, I'm setting a priority fee. You just place your order, they abstract it, it's the same cost, it goes in, first come, first serve. That's it, right? So the fact that they remove that from the equation, and it's a private validator, so that's very small, and it's like expensive to run these things, that like they just don't make a lot of money. So that's why, because Kinetic, which I didn't lead with this, but Kinetic is a liquid staking platform. They like, it's just a way for you to have Hype that is staked in one of these validators or delegated one of these validators, and you're getting the yield from that. It's just that they don't make a lot of yield, so therefore you don't get a lot of yield. And it's because of the construction of the chain, because of like how private it is and how little MEV exists.
Beautiful. Super helpful explanation on some of the more technical stuff there, Brad. Always helpful when you're able to provide that kind of explanation. Ledge, you've been around the conversation a little bit. Any final take from you here before we close out on the Hyperliquid side, or anything else?
No, nothing to say. The only thing I had wanted to do is to bring up Oxy's comment, but Brett did it himself, so I'm happy to be silent.
Okay. See you having a nice time in the Telegram at the same time, just commenting on some of these gifts that are getting thrown around. A lot of cats I can see, as usual.
Legendary's distracted at work. We're gonna have to slash them.
Ethos slash for Legendary for commenting on being in Telegram while he's supposed to be on the show. That's fine. Right. Good stuff, guys. Excellent show as usual. Hope you enjoyed it. We do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and you can catch us on Apple and Spotify too. And now we're also offline in chatting around in the Telegram. So hope you enjoyed it. Thanks to Legendary, Bread, Funky, Signal for their contributions today, and the awesome comments from Oxy and others in YouTube that was pushing the conversation forward. We hope you have a wonderful day. Take care. We'll see you again tomorrow. Bye-bye.